Did you know the UK takes far more from your paycheck than what shows on your payslip? Beyond income tax, a maze of hidden charges, freezes, and levies are silently draining households every single day. From the fuel you buy to the council bills you can't avoid, even the price of your morning coffee carries an invisible cost. These aren't taxes you voted for or see listed in bold. They creep in quietly, leaving less in your pocket month after month. Today, we'll uncover the 10 hidden taxes that are stealing your income right now, often without you realizing it. Number 10. Everyday hidden levies. Beyond the big-ticket items like income tax or council tax, countless small levies quietly eat into people's incomes every single day. These are the charges so routine that many barely notice them. Yet together they add up to a significant drain. The TV license fee, for example, is a fixed annual cost that every household with a television must pay, regardless of how much or how little they watch. Alcohol and tobacco duties add pounds to the price of a night out or a simple weekly shop. And plastic bag charges now make even routine errands slightly more expensive. Air passenger duty raises the cost of every flight, meaning family holidays or visits to loved ones abroad are quietly taxed at the point of departure. These everyday levies blend into life so seamlessly that most people never think of them as taxation at all. The real sting lies in how unavoidable they are. While it is possible to adjust spending habits around major taxes or even claim relief in certain areas, these smaller levies target basic activities and purchases. A family cannot avoid paying duty on fuel for their car, nor can they escape VAT built into most purchases. A commuter who buys coffee each morning, pays for public transport, and picks up groceries on the way home is paying hidden taxes at every step of their day. Because these charges are wrapped into the total cost, people rarely question them. Instead, they simply feel the growing squeeze on their wallets and assume it is the result of rising prices rather than deliberate policy choices. When combined, the effect of these levies is striking. Over a year, the average household can lose hundreds or even thousands of pounds to this network of small but relentless charges. What looks minor on the surface gradually becomes a heavy burden, particularly for low and middle income families who have little spare cash to absorb the extra costs. These levies may be individually insignificant, but together they form a web of hidden taxation that touches nearly every aspect of daily life. For millions of households, it is this quiet, constant erosion of income that feels most suffocating, proving that sometimes the smallest taxes are the hardest to escape. Number 9. Stamp duty on homes. For anyone hoping to buy a property in the UK, stamp duty land tax is an unavoidable hurdle that can wipe out years of savings in a single transaction. Unlike other taxes spread across daily life, stamp duty strikes at the very moment families are making one of the biggest financial commitments of their lives. Buyers are forced to hand over thousands, sometimes tens of thousands, simply for the act of purchasing a home. For first-time buyers, this additional cost can be the difference between finally getting on the property ladder or being locked out for years longer. For families upgrading to larger homes, it swallows money that could have gone toward renovations, childcare, or retirement planning. The structure of stamp duty creates deep frustration because it does not reflect ongoing income, but rather punishes mobility. A family earning a stable but modest wage may still face a crushing bill if they attempt to move closer to work or expand for growing children. The tax is calculated on property value, which has soared in recent years, meaning that even average homes in many areas now carry steep stamp duty charges. While temporary relief measures sometimes ease the burden, the underlying system ensures that ordinary buyers continue to pay dearly for basic housing needs. It is a classic example of a hidden tax, one-off, yet so large that it reshapes financial futures. The wider effects ripple across the housing market. Potential sellers delay moving to avoid the cost, reducing supply and driving prices even higher. Younger buyers, already squeezed by high rents, find the additional barrier almost impossible to overcome. Even investors and landlords factor stamp duty into rent levels, passing the burden on to tenants. What should be a straightforward step towards stability, owning a home, becomes a moment of financial strain imposed by the tax system itself. By taking thousands from people at the exact point they need resources most, stamp duty functions as one of the UK's most punishing hidden taxes, draining opportunity and making property ownership increasingly out of reach for ordinary households. Number 8. Inheritance tax traps. Inheritance tax, often called the death tax, has quietly become one of the UK's most resented hidden levies. While originally designed to target only the wealthiest estates, frozen thresholds and rising property values now pull far more families into its net. The main threshold, unchanged for years, means that as house prices climb, even ordinary families with modest homes in London or the South East find themselves liable. Children inheriting the family home often face unexpected tax bills that can stretch into tens of thousands of pounds. What was once considered a tax only for the elite has evolved into a burden that traps middle-class households, many of whom never imagined they would be affected. The unfairness of this tax lies in its timing. Families often face inheritance tax bills while grieving the loss of loved ones, forced to sell homes or liquidate assets to cover the cost. At 40% on the value above the threshold, the tax can feel like the state is taking almost half of what parents worked their entire lives to build. Because thresholds remain frozen, the effect intensifies year after year, catching more estates in its grasp. This creates a situation where financial planning becomes essential. Yet most families do not realize the danger until it is too late. The idea of building generational wealth becomes undermined by policies that strip it away at the point of transfer. The broader consequence of these traps is a loss of security and opportunity for future generations. Inheritance that could have supported education, home purchases, or financial independence instead goes to the taxman. For many families, the frustration comes not just from the money lost, but from the sense that they are being penalized for responsible saving and home ownership. Ordinary households who lived modestly suddenly face the same burdens once reserved for the very wealthy. This creeping expansion of inheritance tax illustrates how hidden levies reshape expectations, turning life's milestones into moments of financial shock. It has become one of the most striking examples of how the UK's tax system quietly drains income and assets long after they were first earned. Number 7. Pension and savings erosion. For decades, people have been told that saving for retirement is the responsible path. Yet the UK system quietly punishes savers through a mix of allowance reductions, hidden charges, and tax traps. Pension contribution limits have been frozen or reduced, meaning workers who set aside money for the future often find themselves restricted or unexpectedly taxed. Lifetime and annual allowances act like invisible ceilings that penalise those who save diligently. Even ordinary workers can be caught by these limits, not just high earners, as inflation pushes wages and pensions closer to thresholds. Instead of rewarding financial discipline, the system creates obstacles that leave people with less than they expected when they finally retire. Savings accounts face their own erosion. While interest rates may rise, inflation often climbs faster, meaning the real value of savings falls over time. The government also taxes certain savings returns, such as dividends and capital gains, reducing the growth potential of investments. This double hit, rising prices, reducing purchasing power, and taxes, reducing growth, means that money set aside for security loses value each year. Families saving for education, a first home, or simply an emergency fund find their efforts quietly undermined. It is a hidden tax in the truest sense. No bill arrives in the post, yet savers steadily lose wealth. The long-term impact is devastating for financial security. Pensioners who planned carefully may discover their retirement income is far smaller than anticipated. Middle-aged workers realize their savings cannot keep pace with rising living costs, forcing them to either work longer or lower their standard of living. Younger generations, already squeezed by housing and education expenses, see little incentive to save when the system appears rigged against them. These forms of hidden taxation on pensions and savings create a cycle where financial independence feels increasingly out of reach. The promise of stability in later life is quietly eroded by policies that drain wealth in ways most people never fully understand until it is too late. Number 6. Fuel duties and green levies. Every time drivers fill their tanks, a large slice of the cost goes directly to the government through fuel duties, making petrol and diesel some of the most heavily taxed commodities in the UK. This duty, set per litre, is applied before VAT, meaning people are paying tax on top of tax. For the average commuter, it means that a significant share of their weekly fuel bill is not paying for the fuel itself, but for government revenue. Families who rely on cars for school runs, shopping, or long commutes often feel trapped, as they cannot avoid these costs. The hidden nature of fuel duty lies in the fact that it is blended into the pump price, making it easy to forget just how much is taxation. On top of fuel duties, households face green levies embedded in energy bills, supposedly designed to fund renewable projects and environmental targets. While these levies may have long-term goals, their short-term effect is a heavy hit to consumers already battling rising living costs. Energy companies are required to pass these costs on to households, meaning that even when wholesale energy prices fall, bills often remain high. For ordinary people, the impact is clear. Heating homes, charging devices, or simply keeping the lights on eats a larger share of monthly income than ever before. These levies are rarely highlighted, yet they quietly add hundreds of pounds to annual household expenses. The combined effect of fuel duties and green levies is a steady erosion of disposable income. Delivery drivers, small business owners, and rural households reliant on cars are especially hard hit. Meanwhile, families in poorly insulated homes spend far more on energy, bearing a disproportionate share of the hidden tax. The frustration grows when people realize that despite paying billions in these charges, the benefits often feel distant or uncertain. Roads remain congested, public transport remains expensive, and the promise of cheaper renewable energy still feels out of reach. This makes fuel duties and green levies one of the clearest examples of hidden taxation, draining households daily while being disguised as part of ordinary living costs. Number 5. Council tax. A silent local drain. Council tax is one of the most persistent and unavoidable costs for households across the UK. Yet it operates like a hidden levy that grows heavier each year. Originally designed to fund local services such as waste collection, schools, and policing, it has gradually become a burden that feels detached from the value it delivers. Unlike income tax, which is linked to what people earn, council tax is tied to outdated property valuations from the early 1990s. This means households in modest homes often pay disproportionately high amounts compared to wealthier areas with inflated property prices. As councils struggle with budget pressures, annual increases have become routine, turning council tax into a silent drain on household income that few can escape. For many families, the scale of this cost is shocking when compared to stagnant wages. A household in a small town may face annual bills of over £2,000, regardless of whether incomes have risen to match. Pensioners living on fixed incomes are particularly vulnerable, as their council tax demands grow, while their state pensions barely cover essentials. Even renters cannot avoid the impact, as landlords pass the cost on through higher rents. This creates a cycle where the poorest households shoulder a heavier relative burden, making council tax one of the most regressive elements of the entire taxation system. Unlike a one-time purchase with VAT, council tax is a relentless monthly or yearly payment that drains income before people even think about discretionary spending. The hidden pressure of council tax extends beyond individuals to entire communities. Rising costs push households to cut back on local spending, hurting small businesses and community life. Families who already pay high energy bills and inflated food prices find themselves squeezed further, forced to make tough choices between essentials. The irony is that while people pay more, many councils continue to reduce services due to budget shortfalls, leaving residents feeling they are paying extra for less. This combination of rising costs and declining services makes council tax one of the most frustrating and draining hidden taxes in the UK. For millions, it is not just a bill, it is a symbol of how local taxation can erode financial stability. Number 4. VAT on everyday spending. Value-added tax, or VAT, is one of the most relentless hidden taxes in the UK, quietly attached to nearly everything people buy. At a standard rate of 20%, it inflates the price of goods and services before most shoppers even notice. The hidden nature of VAT lies in its invisibility. People see a shelf price and rarely think about the fact that a fifth of that cost is going directly to the government. From clothing to household goods, from a simple cup of coffee to the cost of heating a home, VAT is there, silently eroding purchasing power. For many households already struggling to make ends meet, this invisible surcharge makes every transaction a little heavier on the wallet. The regressive impact of VAT is particularly severe because it does not discriminate between income levels. A millionaire and a minimum wage worker both pay the same rate when buying a new pair of shoes or replacing a broken appliance. For lower-income households, this means a much higher share of their limited income is consumed by VAT, turning it into one of the most unequal forms of taxation. While some items, like basic groceries, remain zero-rated, countless essentials still fall under VAT. Heating bills, children's clothing beyond a certain size, and even home repairs can all come with this hidden tax attached. Families often do not realize just how much they are contributing in VAT across a month or a year, but when the totals are added, it can amount to thousands. The long-term effect of VAT on everyday spending is a gradual but constant drain on disposable income. Families may postpone replacing old furniture, cut back on leisure activities, or struggle to manage rising costs for home improvements. Small business owners also feel the pinch, as they must raise prices to cover VAT obligations, which can push customers away and reduce competitiveness. This creates a cycle where consumers pay more, businesses suffer, and the government continues to profit from every transaction. VAT is not just a tax, it is a daily reminder that even the most ordinary purchase carries a hidden cost. For many, it represents one of the clearest examples of how invisible taxation reshapes the household budget. Number 3. Stealth freezes in tax thresholds. One of the most effective ways the government collects more revenue without announcing a tax rise is through what experts call a stealth freeze. Instead of adjusting income tax thresholds in line with inflation, the government keeps them frozen, which quietly drags more workers into higher tax bands over time. On the surface, it looks harmless. Nothing has changed, and the tax rates remain the same. Yet as wages naturally rise, even just to keep pace with inflation, a larger portion of income is taxed at higher levels. This means people end up paying more tax without any official increase, and few realize how much this slow shift costs them each year. The real sting of these freezes lies in their invisibility. When the basic allowance or higher rate thresholds remain unchanged for several years, millions of ordinary workers cross into new tax categories without ever receiving what feels like a real pay rise. A teacher who once comfortably stayed in the basic bracket may suddenly find themselves paying higher rate tax after a modest salary bump. For families, this can mean hundreds or even thousands more in lost income annually, all without a single change to tax law being announced. It feels like standing still while being pulled forward into a trap, and the quiet nature of this mechanism is what makes it so powerful. Politicians can claim they have not raised taxes while still increasing the government's take. The impact spreads widely across society. Young professionals feel it when promotions come, with smaller than expected boosts to take-home pay. Middle-income families watch as household budgets tighten despite working longer hours. Retirees who take part-time jobs can unexpectedly find themselves taxed more heavily than anticipated. The hidden effect of these stealth freezes is cumulative, stripping households of thousands over time. What seems like a technical detail in government policy is, in reality, a major force reshaping the disposable income of millions of people. It is taxation by another name, silent, unnoticed, and incredibly effective at taking more from the public while leaving them feeling that they are somehow standing still financially. Number 2. National insurance. Double the burden. Most workers in the UK think of national insurance as just another deduction on their payslip, but few realise how deep its impact runs. Unlike income tax, which people expect, national insurance contributions are split between employees and employers, creating a double burden that quietly drains income from both sides. While an individual might only notice the chunk removed from their wages, their employer is also paying a significant amount on their behalf. This hidden structure means that the real cost of employment is far higher than what most workers see, and that cost inevitably limits wage growth. Employers often hold back salary increases because they must cover their own national insurance obligations, making it a hidden cap on workers' earnings. The system is framed as a way to fund state pensions, the NHS, and welfare benefits. But the reality is far more complex. National insurance has steadily evolved into a stealth tax that mirrors income tax in everything but name. Rates and thresholds have been raised and frozen repeatedly, pulling millions more into higher contribution brackets without open debate. Many younger workers, already struggling with housing costs and stagnant wages, see little return on what they pay in, yet the deductions keep growing. This lack of transparency means people often underestimate how much of their income truly goes toward this levy. It is not simply the small percentage written on a payslip. It is a larger share of potential income lost before it ever reaches their bank accounts. For the average household, the hidden cost of national insurance compounds over decades. A worker earning £35,000 may think they are contributing a fair amount, but when factoring in both personal and employer contributions, thousands more vanish each year than expected. Over a lifetime, this could total well over £100,000 in lost wages and missed opportunities for saving or investing. Families may struggle to pay off mortgages, save for education, or build retirement funds, because so much of their potential income is redirected through this system. By disguising itself as something separate from ordinary taxation, national insurance quietly siphons off wealth in a way most people barely question, making it one of the UK's most effective hidden taxes. Number 1. The inflation tax. Your money shrinks daily. Every day, without you noticing, inflation works quietly in the background, eating away at the value of your income. This hidden force is often called the inflation tax, because, much like a direct tax, it reduces your purchasing power, leaving you with less than you thought you had. When prices of everyday essentials rise faster than wages, people end up paying more for the same goods and services, effectively handing over part of their earnings without a single tax form being filed. Groceries that once cost £40 now demand £50. Fuel that filled your tank last year feels painfully more expensive, and energy bills continue to climb, all while salaries struggle to keep up. The money in your wallet buys less, and yet most never realize they are silently being taxed. Governments often benefit from inflation because rising prices automatically generate higher tax revenues. As wages creep upward to match inflation, more income gets pushed into higher tax brackets, and higher prices on goods mean more VAT is collected. This means the state gains while households struggle. It is not a tax written into law that people can clearly see, but a systemic feature of how the economy works, turning invisible price rises into a form of revenue. That is why many experts argue inflation is not just an economic trend, but a deliberate hidden mechanism that transfers wealth from ordinary citizens to institutions and the government. For families, this hidden tax shows up in daily sacrifices. Parents find themselves cutting back on children's activities. Retirees watch their savings lose value in real time, and workers feel their paychecks stretched thinner each month. Imagine saving diligently for years, only to realize that the £10,000 you set aside no longer covers the same expenses it once did. Inflation silently robs value from savings accounts, pensions, and even long-term investments if they are not properly adjusted. It creates a sense of running harder only to stay in the same place. That is why inflation is one of the most insidious forms of hidden taxation in the UK, taking from everyone equally but hurting the most vulnerable the hardest. The reality of life in the UK is that taxation extends far beyond the numbers we see on our payslips. Hidden mechanisms like inflation, threshold freezes, VAT, council tax, and everyday levies are constantly at work, quietly pulling money from households without clear warning. For many families, the weight of these unseen taxes feels heavier than official rates ever suggest. They creep in through daily purchases, energy bills, or even inheritance, reshaping financial futures in ways people rarely notice until it is too late. What makes these hidden taxes so powerful is their invisibility. Unlike a direct income tax, they do not arrive with a clear explanation or headline announcement. Instead, they erode wealth slowly, month by month, until disposable income is stretched thin and financial goals feel increasingly out of reach. By understanding these mechanisms, people can at least recognize where their money is going and why life feels more expensive, even without formal tax rises. Awareness is the first step toward adapting, planning, and demanding greater transparency. The UK's hidden taxes may be silent, but their impact is loud in the lives of millions, shaping how people save, spend, and dream about their future.